So it's June 29, 2026, and you are basically standing at the epicenter of a massive earthquake.
Yeah, a really massive one. But, the shockwaves from this one aren't traveling through the ground.
Right.
They're rippling straight up into low Earth orbit,
Exactly. I mean, Rocket Lab, which is obviously famous for building and launching rockets, just announced they are acquiring Iridium Communications.
which is a legacy satellite telecom giant.
Right. And they're doing it for an enterprise value of approximately $8.0 billion. dollars.
It's just a staggering move. I mean, it fundamentally rewrites how space infrastructure is owned and operated.
Oh, absolutely.
But to really understand the magnitude of what just happened, you have to look past the initial shock value of that headline. We are basically witnessing the birth of a completely closed-loop space applications powerhouse.
And for you, the listener, we've pulled together a stack of really fresh primary sources to decode exactly how this is happening.
Yeah, we have a lot to go through today.
We really do. We're looking at the official SEC Form 8K filing that details the merger agreement.
Which is incredibly dense, by the way.
Oh, so dense. Plus the joint press release, a highly detailed investor presentation, and the actual transcripts from Rocket Lab's official YouTube update.
Right. And that video features both Rocket Lab CEO Peter Beck and Iridium CEO Matt Desch.
Yeah, so we have the legal mechanics, the financial architecture, and the strategic vision straight from the executives
It
themselves.
doesn't get much more direct than that.
Exactly. So the mission of this deep dive is to really unpack how a launch provider absorbing a satellite network creates this unprecedented vertically integrated entity.
Right. We're going to decode the complex financials of this $8 billion deal and dig into the technical advantages of Iridium spectrum.
Yeah, and ultimately figure out why this completely shifts Rocket Lab's long-term competitive positioning in the telecom market. Okay, let's unpack this.
So we have to start with the core philosophy driving the entire deal. Peter Beck laid out a very specific formula in that investor update.
Right, the equation.
Yeah, he calls it the 1 + 1 = 3 equation.
Which sounds like bad math at first glance.
It does,
Yeah.
but conceptually, it makes total sense.
Hmm.
On one side, you have Rocket Lab bringing uncontested launch capabilities and, at-scale spacecraft manufacturing.
Right.
And on the other side, Iridium brings a unique, fully operational constellation of 66 active satellites, plus highly valuable spectrum and extremely strong recurring cash flow.
Wait, I have to push back on the premise of this equation right out of the gate.
Okay, go for it.
So it's like a delivery company, not just buying the factories that make the goods, but buying the exclusive rights to the roads they drive on.
That's actually a great way to put it.
Right, but couldn't Rocket Lab just build their own network from scratch? I mean, they already build the rockets and the satellites.
Mhm.
Buying a massive telecom infrastructure means inheriting legacy tech and, honestly, a massive customer service burden.
That is the exact friction point a lot of analysts are raising. But the sources actually address this head on.
Mhm.
What's fascinating here is that Rocket Lab isn't just buying the metal in the sky. They are absorbing Iridium's entire operational team and their established global distribution channels. Beck refers to this as the ultimate shortcut.
A shortcut to what, exactly?
Well, if you look at the traditional aerospace model, building a large, successful application in space comes with a massive valley of death.
Ah, the Valley of Death. Basically, the time between spending all your money and, making your very first dollar.
Exactly. You spend years designing a constellation, years manufacturing it, and then years paying third-party launch providers to actually put it in orbit.
Which is incredibly expensive.
Right. During that entire period, your cash burn is astronomical and your revenue is zero.
Zero.
And even after the satellites are live, you have to spend a decade building a trusted brand and a customer base to get any sustained recurring cash flow.
So by acquiring Iridium, they completely bypassed that multi-billion-dollar, decade-long cash burn.
Exactly. They instantly inherit an established customer base of 2.55 million active subscribers.
Wow, 2.55 million.
Yeah, that's the core of the 1 + 1 = 3 formula. They bypass the hardest part of the telecom business, which is customer acquisition and operational teething.
Right, and then they apply their manufacturing and launch efficiencies to drastically lower the cost of maintaining that very network.
You nailed it.
Which brings us to the actual assets that make this shortcut so incredibly valuable. I mean, we really need to talk about the moat.
Oh, the spectrum.
Yes. In the space telecom world, the moat is built entirely on spectrum, and the spectrum Iridium holds is globally harmonized L-band spectrum.
Yeah, the sources make a huge deal out of this.
But for the listener who, maybe knows orbital mechanics better than radio frequencies, why is L-band the crown jewel here? Like, compared to the Ku or Ka bands that companies like Starlink use?
Well, it really just comes down to the physics of wavelengths and weather.
Okay, how so?
So L-band operates at a lower frequency, meaning it has longer wavelengths. When a Ku or Ka-band signal hits a heavy rainstorm, those shorter wavelengths physically bounce off the raindrops.
Oh,
Yeah, the signal scatters. It's an
yeah.
issue called rain fade.
Yeah.
But because L-band wavelengths are longer, they essentially wrap right around the water droplets.
That is wild.
Yeah, the signal penetrates through severe weather, dense cloud cover, and harsh conditions without dropping at all.
So if you are a pilot flying through a hurricane or maybe a mariner in the middle of a massive squall, a high-speed Ku-band connection just doesn't help you if it completely drops out during the storm.
Exactly, you need the L-band. It makes Iridium's network truly mission critical.
Right.
They provide continuous pole-to-pole coverage over every ocean and airway. It's an essential lifeline for first responders, global logistics, and of course, government defense partners.
Wow. So if spectrum is the invisible real estate of space, L-band is like prime beachfront property that literally never floods.
That is the perfect analogy.
Yeah.
And here is the kicker: spectrum is a tightly regulated, internationally coordinated, finite resource.
Meaning you can't just make more of it.
Exactly. You cannot just invent more L-band spectrum. Owning these rights outright gives Rocket Lab an almost insurmountable strategic advantage. It completely shifts their long-term competitive positioning.
Right, because instead of just being a vendor for other companies, they are now the end-to-end owner of the infrastructure.
Precisely.
But, owning the flood-proof highway is only half the vertical integration story.
Mhm.
We have to look at the delivery trucks.
Or rockets.
Exactly. Because Rocket Lab owns the launch vehicles, their Electron rocket, and the upcoming Neutron medium launch vehicle, they completely eliminate third-party launch costs for deploying and replenishing these constellations.
Which is huge when you consider the long-term economics of that.
Yeah.
Satellite constellations are not permanent.
Right, they degrade over time.
Yeah, they degrade, they deorbit, they constantly need to be replenished. Historically, whenever Iridium needed to deploy new satellites, they had to pay a massive premium to a launch provider, like SpaceX.
And the launch provider takes, what, a 20 to 30% profit margin on that flight?
Easily. But now, Rocket Lab captures that entire launch margin internally.
So they essentially pay themselves to launch their own satellites. That is brilliant.
It really is. Furthermore, it guarantees orbital access. The investor presentation highlights a really critical trend. Global launch capacity is tightening right now.
Oh, for sure.
There are way more satellites waiting for a ride than there are actual rockets available. By internalizing launch, Rocket Lab ensures total continuity of service for the Iridium network.
So they never have to wait in line behind someone else's payload.
Exactly. And they are completely immune to price gouging in the launch market.
Okay, so we've established the moat. They own the flood-proof spectrum, and they own the exclusive rockets to get the hardware into orbit.
Right.
But I mean, you don't drop $8 billion just to sit on a legacy network and collect subscription fees, right? Peter Beck's vision obviously goes way beyond the status quo.
Oh, completely. The sources outline a massive expansion plan. They want to leverage this new vertical integration to scale into entirely untapped markets.
Right, so they aren't just coasting.
Not at all. They are rapidly accelerating the development of next-generation satellite constellations. This includes proprietary and standards-based satellite Internet of Things, or IoT.
Oh, wow. And the most immediate push is into direct-to-device services, right? The documents frequently refer to it as DTD or Iridium NTN Direct.
Yes, D2D is a huge part of this.
So the promise of taking a standard smartphone, literally the one sitting in your pocket right now, and connecting it directly to a satellite without needing any specialized hardware or like a bulky antenna.
That's the dream.
But mechanically, how does that actually work? Because a satellite in low Earth orbit is moving at something like 17,000 miles per hour.
The Doppler shift problem.
Exactly. I mean, if a satellite is moving that fast, the radio frequency is constantly shifting from the perspective of the phone on the ground.
Right.
It's like a police siren changing pitch as it drives past you. A standard iPhone isn't designed to calculate and compensate for orbital Doppler shift. So how do they solve it?
Well, that is the genius of the next generation architecture Beck is talking about. Instead of putting the burden of processing on the consumer device, the phone.
Right.
Rocket Lab will manufacture satellites with massive phased array antennas and highly advanced onboard processing.
Oh, so the satellite does the heavy lifting.
Exactly. The satellite itself handles the complex Doppler compensation and beam steering from space.
Mm.
It basically tricks the smartphone into thinking it's talking to a standard cell tower just a few miles away.
Here's where it gets really interesting. The press release heavily positions this D2D capability as a vital new tool for national security and emergency response,
Oh, absolutely.
because it ensures communications hold up when terrestrial cell networks are knocked offline by a natural disaster or, physically destroyed in a conflict zone.
Right. If we connect this to the bigger picture, we are witnessing the rapid convergence of terrestrial and space communications.
Yeah, the lines are blurring.
Completely. Matt Dish, Iridium CEO, actually noted in the YouTube update that as these domains merge, success belongs to whoever can innovate and deploy space capabilities the absolute fastest and the most efficiently.
And when you control the manufacturing line and the launch pad, your iteration cycle for deploying these D2D upgrades is incredibly fast.
Exactly. You aren't waiting on anyone else.
But the vision expands beyond just telecom, right? The investor materials dedicate a lot of time to a push into alternative PNT architectures.
Yes.
PNT being positioning, navigation, and timing.
This is a really critical area for anyone following the aerospace and defense sectors right now. We currently rely almost entirely on GPS for global PNT.
Right, which feels a little fragile.
It is because GPS satellites reside in medium Earth orbit, or MEO, which is about 20,000 kilometers away. By the time that signal actually reaches Earth, it is incredibly weak.
Meaning it is terrifyingly easy to jam or spoof.
Extremely easy.
And the military, the aviation industry, the financial sector, they all rely on GPS timing to timestamp transactions and navigate. If GPS is degraded or knocked offline by a bad actor, the cascading economic and security effects are pretty catastrophic.
Which is exactly why the Department of Defense and commercial industries are absolutely desperate for a resilient backup.
Right.
Because Iridium's constellation operates in low Earth orbit, which is only about 780 kilometers away instead of 20,000.
Oh, wow. That's a huge difference.
Yeah, and it uses that robust L-band spectrum we talked about, so the signal reaching the ground is significantly stronger than GPS.
That makes total sense.
So by leveraging Iridium's network, Rocket Lab can offer a secure, highly reliable alternative PNT architecture that is just incredibly difficult to jam locally.
So when you stack all these new capabilities, the IoT tracking, direct-to-device cellular, and alternative PNT, the investor presentation calculates the total addressable market, the TAM, at over $100 billion.
Yeah, a $100 billion TAM. It completely shifts Rocket Lab from being a vendor fighting for a slice of the launch market into a primary infrastructure provider for a massive global economy.
But, a $100 billion dream doesn't pay the bills today.
No, it doesn't.
A launch provider buying a telecom giant for $8 billion sounds like a massive financial risk. I mean, how does a company that historically burns cash building rockets actually afford a legacy cash cow?
That is the big question.
Right, so let's transition into the mechanics of the SEC Form 8K.
Okay, so the financial architecture of this deal is complex, but it's highly strategic. The transaction values Iridium at an enterprise value of $8 billion.
Which works out to exactly $54 per share, right?
Correct, but it is not a straight cash buyout. It is a very calculated mix of cash and stock. For every share of Iridium common stock, the holder receives $27 in cash, plus a specific fraction of Rocket Lab common shares.
And the 8K details an exchange ratio for that stock portion that uses something called a collar mechanism.
Yes, the collar.
So for the institutional and retail investors listening, how does this collar actually function to protect shareholder value projections? Like, is it basically a financial shock absorber?
That's exactly what it is, a financial shock absorber. Because the deal is not expected to close until mid-2027.
Which is a pretty long runway.
Yeah, and the stock prices of both Rocket Lab and Iridium are going to fluctuate wildly over the next year. So the collar defines a specific trading band from $67.50 to $112.50 based on Rocket Lab's stock price.
So if Rocket Lab's stock price changes before the closing date, the exchange ratio automatically adjusts within that band.
You got it. If Rocket Lab's stock drops, Iridium shareholders receive a higher fraction of shares to ensure they still get that agreed-upon value.
Okay, that makes sense.
And conversely, if Rocket Lab's stock surges, they receive fewer shares.
So it protects Iridium shareholders from losing value in a downturn while protecting Rocket Lab shareholders from extreme dilution in an upturn.
Exactly. It locks in the overall integrity of the deal's value, regardless of market volatility.
Which makes perfect sense for the stock portion. But where is Rocket Labs sourcing the massive amount of capital required for the $27 per share cash portion?
Right. So they secured commitments for a massive $3.6 billion, 364-day senior secured bridge term loan facility.
Wow. And that's from Deutsche Bank and Wells Fargo, right?
Yes.
3.6 billion is a staggering amount of bridge to build. What does that kind of debt burden do to their balance sheet?
Well, a significant portion of that bridge loan, about $2.1 billion, is actually earmarked to refinance Iridium's existing debt.
Oh, I see.
Yeah, they are essentially sweeping the old debt off the table and restructuring it under the new combined entity.
Okay, so it's not all brand new debt on top of everything else.
Right. And then the remaining $1.5 billion from the loan will be combined with approximately $1.6 billion directly from Rocket Lab's own balance sheet cash to actually fund the buyout.
Still, it's a huge layout of capital, but when you look at the financials they are acquiring, the debt burden starts to look a lot more manageable. Because the investor presentation lays out Iridium's 2025 financial strength, and they generated $871.7 million in revenue.
Which is great, but the metric that institutional investors are really focused on is the profitability. Iridium delivered $495 million in EBITDA in 2025.
Right.
That is a 57% margin.
Let's break down that acronym for the listener because the O in OIBDA is doing a lot of heavy lifting here. It stands for operational earnings before interest, taxes, depreciation, and amortization.
Right.
Why is that operational distinction so critical in the space sector?
Because launching satellites is incredibly capex heavy. It requires massive but sporadic capital expenditures.
Right. Buying rockets isn't exactly a smooth monthly expense.
Exactly. By looking at EBITDA, investors can strip out those cyclical capital costs and just see the raw cash generated by the network's daily operations.
And a 57% operational margin proves that once the network is actually in space, it is a relentless cash-generating machine.
Relentless. And Rocket Lab's chief financial officer, Adam Spice, leaned into this heavily. By adding Iridium's high-margin recurring revenue, this deal fundamentally changes Rocket Lab's financial DNA.
It really shifts them away from being solely a capital-intensive hardware builder.
Right, a business where your revenue is tied to discrete, unpredictable events like a rocket launch.
Yeah.
It shifts them into a cash-generating services platform. They now have this steady, reliable stream of subscription income that can fund their future R&D.
Like the Neutron rocket program.
Exactly. They can fund it without constantly needing to dilute shareholders by going out and raising outside capital.
So when does this fully integrated behemoth actually take over? Like, what is the anticipated timeline for integration?
The transaction is slated for completion in mid-2027.
Okay.
But it faces a pretty steep climb through customary closing conditions.
Right. Regulatory approvals in the aerospace and telecom sectors are notoriously brutal.
They really are. They require clearance under the Hart-Scott-Rodino Antitrust Improvements Act. And more critically, they need consent from the U.S. Federal Communications Commission, the FCC, to actually transfer control of Iridium's telecommunication authorizations and those precious spectrum licenses.
It was never a quick process.
No, it's not. They also have to clear various foreign investment and international satellite laws because, this is a globally operational network.
And they obviously need the approval of Iridium stockholders.
Yes, though the 8K does note that Iridium directors who currently hold about 1.6% of the outstanding shares have already signed binding support agreements to vote in favor of the deal.
Good to know. And to ensure nobody gets cold feet during this really long regulatory runway to mid-2027, the merger agreement includes a pretty hefty termination fee, right?
Very hefty. If Iridium backs out under specified conditions, say, to accept a superior competing offer from a rival telecom company, they are required to pay Rocket Lab $223.62 million.
Wow. That is an incredibly expensive left-at-the-altar fee, over $200 million just to walk away.
It definitely shows how aggressively both sides have built a legal framework to ensure this combination actually makes it to the launch pad.
For sure. The legal and financial structures completely mirror the ambition of the technical vision here. They've engineered a deal that is very difficult to unspool.
Absolutely.
So, Bringing this all together for you listening by merging their uncontested rocket launch capabilities with Iridium's globally coordinated L-band spectrum and that operational constellation, Rocket Lab isn't just buying a legacy telecom company.
No, they are creating a completely closed-loop ecosystem.
Exactly. They will design the advanced satellites in-house, manufacture them on their own production lines, launch them into orbit on their own rockets, and operate the network using their own exclusive spectrum.
All while selling next-generation services directly to millions of end users.
It is the ultimate manifestation of vertical integration. I mean, they have systematically eliminated every single third-party vendor from the value chain.
It's brilliant.
So what does this all mean?
Well, this raises an important question, one that goes way beyond the balance sheets and the engineering specs we've discussed.
Okay, what is it?
If a single company controls the manufacturing of the satellite, the rocket that takes it to space, and the exclusive spectrum it uses to beam data back to Earth, how long until regulatory bodies step in?
Oh, right. Because we talked about antitrust approval for the initial merger, but the long-term implications of this kind of monopoly on the space infrastructure loop are massive.
Huge. If traditional telecom companies have to pay a toll at every single step, to the manufacturer, to the launch provider, to the spectrum holder, how do they possibly compete on price against an entity that owns the entire highway?
It almost seems impossible, and it forces a response from the only other entity playing a similar game.
SpaceX.
Right. While SpaceX has Starlink and their own rockets, Iridium's L-band spectrum provides distinct operational advantages that Ku-band simply cannot replicate.
Exactly. This acquisition doesn't just challenge terrestrial telecoms, it sets up a massive geopolitical clash of titans in low Earth orbit.
Yeah, the space race just became a monopoly board, and Rocket Lab basically just bought Boardwalk. You know, you thought you were just feeling an earthquake on June 29th.
But the tectonic plates have permanently shifted.
They really have. And the shockwaves from this new vertically integrated powerhouse, they are just getting started.